Hi there, welcome to Kneppy Invest. I did get a couple of requests to do an update on Tesserent, and because they did have an operating cash flow positive December quarter, I thought I will do an update on this company. I'm not a shareholder of Tesserent. I had been following this company closely, but I don't really follow Tesserent all that closely now. There are a few reasons behind that. And one of the main reasons is I just don't like their business model at this point in time, and that's the roll-up model. So this company is into cybersecurity, and what they've been doing over the past 4 years is acquiring all these different cybersecurity companies and then rolling it up, all these companies into the one company, which is Tesserent. A lot of times it will see the roll-up model being successful for a short to medium term, but over the long term, the roll-up model doesn't tend to be successful. So that is my main concern about Tesserent. And even though it has been successful in increasing the revenue and the cash receipts for this company, that increase in revenue, increase in cash receipts hasn't really gone to the bottom line. I need to see this company being profitable on a continuing basis, because the debt in this company, and this is the main reason I don't like Tesserent, the debt this company has is actually increasing. And I think that could be a problem because they keep acquiring companies. And not to mention, one of the other ways they acquire companies is to increase the shares on issue. So my big question around this change in business model Tesserent had made about 3 or 4 years ago, this roll-up model they decided to implement, is the question around whether this business model has created any value for shareholders. And at this point in time, and I want to emphasize this point in time, maybe not in 2 or 3 years, but right now, this change in the business model has not created value for shareholders. And I have used this particular slide in other Tesserent videos. And what I've been looking at with this company is the amount of shares on issue, how the shares on issue have increased since they listed on the ASX about 6, 8 years ago. I forget when. And I also have a look at the share price. So if you just look at the market cap of this company, you might be impressed, because the valuation of Tesserent has increased from $21 million to $116 million. But one of the reasons why the market cap has increased is because of this roll-up model. They keep on acquiring other companies or other businesses. But then have a look at the shares on issue. Shares on issue have increased 13-fold since they listed, from 102 million to 1.35 billion. So again, shares on issue have increased 13-fold. The market cap has only increased just under 6-fold. So when the shares on issue have increased at a double rate than the market, that means the share price must have decreased by at least 50%. And that is true for Tesserent. Share price has decreased from 20 cents to 8.6 cents. So if anyone bought into Tesserent shares when they listed on the ASX, this company and this business model change has not created any value for shareholders. Now, you could argue with me that when they underwent this change in business model about 2 or 3, maybe even 4 years ago, the share price was significantly lower than 20 cents. I think it might have been like 4 or 5 cents. So if you bought when they initially went through this change in model, you could argue that Tesserent has created value for those particular shareholders. So that's a few reasons why I'm not the biggest fan of Tesserent. This roll-up model has really diluted shareholders, and the share price has gone back. And even though the market cap or the valuation of this company is higher than it was when they listed, just this dilutive effect in regards to these acquisitions has harmed shareholders over the past few years. Now, the share price at one point in time was 44 cents. So at that point in time, back in, would have been 2020 or early 2021, there was the argument that Tesserent had created value for shareholders. You can't argue that now, because the share price has dropped from 44 cents to a current share price of 8.6 cents. So I've already mentioned that Tesserent is all about cybersecurity, rolling up the cybersecurity secure cloud services or businesses and rolling them up into the one company. Founded in 2015, listed on the ASX in February 2016, and then after about 3 or 4 years where that particular business model they were using when they first listed wasn't really working, I will show you the cash receipts history of this company, but I've excluded the first 3 years because cash receipts went sideways, and the majority of quarters, the cash receipts was well under $1 million. And then you can see, if you look at the full history of cash receipts for this company, when they underwent this change in the business model. Current shareholder, or one of the largest shareholders, if not the largest shareholder, is Jeff Lord. He is 8.0% of the company. He's our Belgravia founder and CEO. Now, in May 22, I don't know why I used May 2022. The market cap of this company was 208 million. That was at a share price of 16.5 cents. Market cap right now is 116 million. That's at a share price of 8.6 cents. So understandably, with the tech set off over the past year, the share price and the valuation of this company has fallen a fair bit. And I always joke about the ticker code, a very explosive TNT. The CEO of Tesserent is Kurt Hansen, and interesting enough, he was the CEO of a company called Pure Security, which was a part of another company called PS&C Group, which sort of was 4 different companies rolled up into one. I think that's Person Security and Consulting. In fact, I was a shareholder of this company for a very short period of time, about 5 years ago. And then the share price went from about 99 cents or a dollar, something ridiculous like that, all the way down to, say, 10 cents. It's no longer on the ASX. I think components of that company have been bought by other companies. But he has been a CEO in different roles. He's also been an executive in senior management roles and operational positions at Checkpoint Software Technologies, F5 Networks, Air Data, Symbol Technologies, Telstra Wholesale, Cisco Systems, and Ericsson. So he has a lot of experience in the IT area, but just because you have a lot of experience in an area doesn't mean you're necessarily going to be a good CEO. So I'm uncommitted to saying whether Kurt Hansen is a good CEO or not at this point in time. He has to prove to me that he is a good CEO, and the best way to prove that he's a good CEO is for this company to start organically growing. And that's the big thing I have with Tesserent. I need to see some really good organic growth in their business. At this point in time, I don't think there is any significant moat or competitive advantage this company has, and that's why it's struggling to grow organically. And the majority of growth, I think right now, is just because of acquisitions the company has made in the past few years. To be fair with Kurt Hansen and Tesserent, there might be some organic growth in there, but I would like to see a breakdown of the difference between organic growth and growth through acquisitions. I haven't really seen that sort of information from Tesserent, and maybe they can provide shareholders that sort of information, because I want to see organic growth, and I'm not sure if there's much organic growth because of the amount of acquisitions this company has been making. Now, before we have a look at the December quarter results for financial year 23, and that was the motivating force for me doing this video, apart from a couple of requests, I just want to go back 1 year ago to see how this company has performed over the past year in terms of receipts growth, and whether this company has become more operating cash flow positive or less operating cash flow positive. Now, one of the flaws around the Appendix 4C or the Appendix 5B is we don't know any changes in working capital. And changes in working capital has been quite significant for Tesserent, and you'll see some of that significance in their commentary when you look at some of their Appendix 4Cs in the past. So I do implore you, if you want to take a closer look at Tesserent, have a look at some of that commentary in terms of working capital changes. It can affect whether the company is highly operating cash flow positive or even operating cash flow negative. Now, in this particular quarter, receipts to customers 37.8 million, and they were operating cash flow positive by $4.2 million. And you'll notice that the cash on hand actually increased from 8.1 million to 13.6 million. So this was actually a pretty good quarter in terms of operating cash flow. And it seems like a lot of that operating cash flow went to the bottom line in increasing cash. But that increase in cash could have been because of options, or could have been because of some debt. They could have gone further into debt, because more than likely they did spend a little bit of money with acquisition. So I didn't actually include that in this particular slide, but we'll have a look at some of the spending they don't have in the operating activities in the next slide. So let's have a look at how they performed in the December quarter in financial year 23. Now onto the December quarter for financial year 23. This might be the last quarter of financial year 22, because it seems like they have changed their reporting calendar, because in the December quarter for financial year 22, it was only 6 months in the year to date. This is 12 months. So that could be a mistake on their part, because just looking at the receipts from customers, 94.8 million seems like that's only 2 quarters worth of receipts, not 4 quarters. So that 12 months, just under the year to date, might be wrong, might be 6 months. But anyway, we'll assume it's 6 months. They've made a mistake there. And the main thing here is this company has seen receipts grow from last year, up 5.1 million. And again, I think a lot of that is just through acquisitions, and maybe a tiny portion of that is through organic growth. Now, the other thing I want to look here is growth in spending. So product manufacturing operating costs up 4.6 million, staff costs up 1.8 million, administration costs down 400,000. So does seem like maybe they are figuring some stuff out, realizing they have to curb some spending, and the first place they've gone is administration and corporate costs. But the main thing here is product manufacturing and operating costs and staff costs up by $6.4 million, significantly higher than the increase in cash receipts. And because the spending is higher than the inflow in cash receipts, the company was not quite as operating cash flow positive as 1 year ago, only operating cash flow positive by 2.5 million. The other thing you'll notice here is cash on hand fell by 2.2 million. So even though they're operating cash flow positive, they were spending a lot of money in financing and investing activities. For example, capital expenditure, only 166,000. Deferred settlement, because of acquisitions, they had to spend $11 million on that. And they increased their borrowings by $8 million. And this is a main concern for me, that their borrowings, their loans are increasing through time. I want to see that decreasing, because the main threat to this company is the long-term viability of this company is debt. And if we go to section 7 of the Appendix 4C, the financing facilities section, we can see the debt of this company right now. So $46 million in debt. They also have 12 or almost $13 million of unused financing facilities. And more than likely, knowing this company, they'll use that unused financing facilities to purchase other companies. Now, they didn't provide any particulars around these facilities in terms of interest rates. I'd love to see what interest rate they have, but these facilities or financing facilities are provided by the CBA. So that is a reputable bank in Australia. So more than likely they have been provided a fair financing facility interest rate. Some companies I've seen interest rates of 18 to 20%, and more than likely Tesserent isn't paying that sort of interest rates on their $46 million of loans. Now onto the receipts history for Tesserent. And one of the things I look for in every single company, no matter if it's the biggest companies in the world or the smallest companies in the world, is growth in receipts or revenue, depending on what you're looking at. There shouldn't be a significant difference between receipts or cash receipts and revenue. There will be a subtle difference, but not a big difference. So I think they can be used interchangeably. But because companies report their cash receipts in quarterly reports, that's why I look at cash receipts histories for these smaller companies, because I like to see the quarterly breakdown. And I've actually excluded the period between when they listed on the ASX and the June quarter 2019, because that was a totally different company and receipts were going sideways at that point in time. I've included the June quarter 2019 with receipts of 1.3 million, because you can see the growth in receipts from there to now. So receipts have grown from 1.3 million in that quarter to $43 million in the most recent quarter. Now, just because receipts have fallen from the last 2 quarters is not necessarily a bad thing. It doesn't necessarily mean there's a change in trend. Who knows? Next quarter, the current quarter, the March quarter, receipts might go up to $60 million. So over time, the trend in receipts is up. That makes sense because this company has been acquiring businesses. And I'd love to see a breakdown again in the growth of organic receipts and receipts acquired through acquisitions. So I'd love to see that sort of breakdown. I just want to know the organic growth in this business right now. And as we turn our attention to the chart, this is the daily chart going back to June 2021. It has not been a happy story for TNT or Tesserent shareholders since then. Share price at one point in time before the start of this period got up to about 44 cents. I do remember that. That was either towards the end of 2020 or the start of 2021. A lot of hype in this company in the last, say, 3 or 4 months of 2020 because of all those cybersecurity attacks on the Australian government. We saw the share price of this company increase by about 5 or 6-fold during that short period of time. But over the past 18 months, almost 2 years, share price of this company has been in a downtrend. There's been times when it looked like this trend or the sentiment was trying to shift around. And most recently, that was during December into the start of January. Share price went from, or rallied, we'll say, from just under 9 cents to 15 cents. So a nice rally in the share price. It did look like the share price was trying to get into an uptrend. And then all of a sudden, that change in sentiment or potential change in sentiment, potential change in trend in the share price came unstuck, and the share price has fallen from 15 cents to 8.6 cents. And I think a good chance, one of the reasons why the share price has dropped is because of their Appendix 4C. And right now at 8.6 cents, the last time the share price was this low, I think, was back in October 2020, when this company went through that hype period because of cybersecurity attacks on the Australian government. And who knows how much further the share price in this company has to fall from here. That's all I have for this update to Tesserent, focusing on their Appendix 4C for the December quarter. Even though it was operating cash flow positive quarter, that's the sort of thing I do expect from Tesserent. But I want to see some profitability coming in. I want to see this company being operating cash flow positive and free cash flow positive on a consistent basis, because there have been some quarters, because of changes in working capital, that they have been operating cash flow negative. So at this point in time, the market is not certain, not sure about this company moving forward. My other problem with this company is the debt. The increasing debt is up to, well, $46 million right now, and that could be an issue for this company in the future. So if you have any questions about Tesserent, if you have any different opinions from my own about this company, if you think this is a really high quality company and you don't understand the market reaction, you don't understand why the share price is falling, I'd love to hear your opinion on this company. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to you. Now, I've been watching the cricket on the side here, and Australia has absolutely collapsed. I think I might stop watching it. Anyway, that's it for this video. Have a good day. Talk to you later. Bye.